Mama wears combat boots pretty quick.
It's evolved, as we say, to where we kind of thought it might be initially. Of course, when Xerox sort of made their unsolicited bid, HP responded, as you say, very favorably almost, no longer. They rejected, of course, last week. Then then Xerox waited a little while, but then it put out a fairly nasty letter of its own, sort of questioning, well, you want due diligence on us, or you'll at least do some, but you won't allow us to do diligence. We don't understand it. And HP responding, John, with their own letter, as you say, sort of explaining the reasons why. And that's kind of the first time we've seen some of the questions. We have them here. Total contract value questions in excess of revenue declines suggest your revenues may decline even faster in future years. We know TCV of enterprise signings in 2018 was down 13.9%, and they note churn as well was 18%, both of which they say are data points that Xerox has stopped providing. Goes on to sort of have them question the synergies, question the numbers, and explain why they wanted a lot more diligence when they were talking back in August and September about an HP deal to acquire Xerox.
It kind of went from, at least me getting the impression, well, let's see if this makes sense, to, boy, we really hate this deal. You really have to convince us that there's any rationale behind it at all. I thought maybe HP would come back and say, well, maybe it would be worth us acquiring you, but they seem to be questioning the very core of Xerox's business and viability here.
They do. And to your point, I think that's exactly right. They even question, in fact, the company's stated presence in the marketplace once the Fujifilm, well, it's been exited already, but once sort of the rights that they have expire in, I think, either 12 or 24 months, where they talk about synergies here in terms of public information, and they question them. They basically go on, John, to say, you know, you seem to just be saying the costs you're going to take out and the costs we're going to take out separately equal the cost combined that we'll take out, not the actual synergies that will come from putting the two companies together in terms of additional cost. And then they go on as well to question the Fujifilm joint venture, saying Xerox essentially mortgaged its future for a short-term cash infusion.
That's the combat boots I was talking
about.
Yeah.
You know, this now has the possibility of going to a proxy fight. I think you have to increase that possibility based on everything I've been hearing, where they would go after the entire board if you're Xerox or some component thereof to show that shareholders want them to do this. And we could be waiting till April.
Meantime, it's just merger Monday across the board right now. One of the other deals, eBay selling StubHub to Viagogo. We spoke to their CEO in the last hour as well. Talk us through that.
You know, I did have a chance to talk to eBay's currently still interim CEO, because one question, of course, will be, what are you going to do with the proceeds? It's $4.05 billion. It is taxable, but nonetheless, it's going to be a significant amount of money. Didn't tell me much other than we're going to continue our capital allocation plans, which include buybacks, dividends, and M&A for the marketplace business, where they're, of course, looking to try to reignite growth. It was a great investment for them. $310 million in 2007. They exited $4 billion. That's a 17% compounded annual growth rate for the money they put into it.
eBay turning into the HP of e-commerce, in the sense that it's gradually being taken apart. Like, they had GCI Commerce, which you could argue was trying to be Shopify before Shopify. They split that off. They split off PayPal. Now they're splitting this off. What's going to be left?
It's just the marketplace business. And you tell me what the growth looks like for that. That's been the key question as to whether they can reinvigorate that. Maybe ads can become more of a business for them. John, they do have the classified still. They're not going to do anything with that, at least not this year, is again what I was told. So we'll have to wait till next year to see if they do decide to also jettison that.
Finally, calendar-wise, can we cram more in between now and New Year's?
I think we can.
Serious question.
Yeah, no, I think that's a possibility. People seem to be fairly busy. You know, there's always a question of, can you get to the finish line on things, for regulatory, for social issues, for so many of the different things that come up. Not to mention, if you're a fairly large enterprise, the current economic environment, you may have some questions. But there does seem to be a decent pace that would seem to me that we might get some stuff between now and year end.
Big appetites this time of year.
Yeah. Big day for M&A. A true merger Monday finally, Carl. We can actually say it and mean it.
I saw $63 billion if you include some of the tiny European stuff announced, formally announced.